Hi, I'm Peter Switzer. Welcome to the program which puts you in touch with the best and brightest minds in the business. On tonight's show, Takeover Target expert Tom Elliott will run his eye over those companies that could be in for some market attention. Will Myer make the cut? JB Wiz Mike Kendall will sum up today's market action, and are foreigners giving us a great buying opportunity with the banks and Telstra? Let's wait and see. HSBC's chief economist here in Australia, Paul Bloxham, will tell us if he's worried about a hard landing for China. The CEO of QuickFlix, Stephen Langsford, will serve it up to Netflix for being a backdoor Johnny, and we will look at wild women on top with Di Westaway. I'm looking forward to that one. Stay with us for the next hour and we'll bring you all the latest corporate news and market analysis, plus learn some valuable lessons from Australian success stories. If you have any questions for me or our guests, email them to switzer@switzer.com.au. You can follow me on Twitter and the handle is @PeterSwitzer. But first, two interesting issues grabbed me today, and the first was ex-Treasurer Peter Costello telling us our luck was running out and warned of a widespread hardship when the property sector's rapid growth inevitably slows. He also talked about nervous consumers, but you can understand why we might have some nervous consumers out there with ex-pollies coming out with wild predictions like this. The only reason I would worry about our economy and housing is if unemployment kept creeping up, but there is no evidence that this is actually happening. Sure, we might not believe the recent job numbers, but 121,000 jobs allegedly turned up in August, and even if the ABS is only half right, then I think that's pretty damn good. I see the dollar is starting to fall and interest rates are set nice and low, which all should help the economy. I reckon China will do okay, and the stock market is likely to have another good year in 2015. If Treasurer Hockey had gone for an easier budget, then the economy would have had more confident consumers. So I suggest you don't get too scared about Mr. Costello's predictions. Another story has been for the falling share prices of our banks as foreigners exit yield plays. And I think this is good news for locals who can pick up good companies that pay dividends at lower prices. Take CBA at $77, which gives you a yield of 5.1%. If you add in franking credits and say a simple 3% rise in the share price over the next 12 months, it will give you 10%. You will be able to do better, sure, but they'll be riskier companies. But that 10% sure do me. Okay, with the dollar diving and foreigners exiting the local stock market, are there takeover targets left? And could Myer be one of them? To answer this hip pocket question, we have takeover Tom Elliott of... Tom, I forget where you're from now. Tom Elliott.
Beulah Capital, Peter. Good evening.
I'm sorry about that, mate. I always think of you a big radio star at 3AW, but you are. You're also the takeover expert at Beulah Capital. Sorry, guys at Beulah. All right, Tom, great to see you, mate. Dollar
good to be here.
Dollar falling and takeover targets. It seems to me, in the short term, I guess you'd wait, if you're a foreigner, wouldn't you? You'd wait till you think the dollar's hit rock bottom and then go looking around for something with higher, more valuable US dollars?
Oh, no doubt. I mean, look, foreign investors would have been looking at the $8 going from 94 cents down to 90 cents in about 4 days last week, and they'd probably be saying, well, let's see if it bottoms out. You know, there's all sorts of predictions of 85, maybe even 80 cents, something the Reserve Bank would like to see. Having said that, I mean, foreign takeovers are not the only source of takeovers in the Australian market, so I wouldn't worry too much about the dollar falling just yet. Look, it only adds to Australia's allure in that regard.
Okay, so before we start talking about some companies that you quite like, I'm going to ask you about Myer for obvious reasons, but what about the stock market now? Why do you think it's coming off the boil?
Oh, look, there's a whole lot of things. You haven't mentioned Scottish independence, which is a big risk this week. I mean, you know, National Australia Bank, for example, could have some problems if its Clydesdale subsidiary has to move from Scotland down to England, as some people say might happen. So that's a bit of uncertainty. We've also got the prospect of rising US interest rates, which should be a good thing because it means the American economy is recovering, but pessimists will find bad news wherever they look. And look, going back to what you were saying before about you know, China and so forth, we can't ignore the fact that the iron ore price has gone down, and today I read that the Chinese no longer want to buy so much of our coal. So, you know, there are enough bad things out there to get the nervous Nellies out.
Yeah. But Tom, from your point of view, and taking like a medium view on what you think the market might do you think this is emerging, developing as a buying opportunity for companies that you like?
Well, look, I heard what you said before about buying solid businesses that pay good yields, and I don't think that theme, if you like, has gone away at all. You know, Telstra's yield is still very good, the bank's still very good, so if you can buy them at cheaper prices, that's certainly something we would do. And look, the other thing to remember is that as far as takeovers go, the big issue for me, or several issues right now, is that it is getting harder to grow earnings organically. So companies are looking to fund their growth by basically buying other companies or to provide their growth. And debt is still very, very cheap. Yes, the share market's come off a couple of 100 points, but you know what? It's still at recent highs. So your funding sources, whether equity or debt, is still cheap. There's lots of companies out there to be bid for, and so I don't see that changing anytime soon.
Yep. Also, Tom, before we get to takeovers and whatever, if we say, for example, you know, the Fed actually talks tougher than what the market was expecting this morning, and that is taking out that considerable period of timeline that they've had in their statements. If they imagine that they take that out, then the Scots, you know, go long alcohol and vote yes to leave the UK. What kind of madness and mayhem do you think might happen to the stock market, you know, maybe on Friday and Saturday?
Well, let's take those two things separately. I mean, the Fed should be very considered. Of course, Janet Yellen is still relatively new to the job, and so all the people that sit there gazing at crystal balls and over-examining every word she says don't quite know exactly what to interpret yet. So that's a source of potential uncertainty, although I'd like to think not too much. As to what the Scots do, I mean, that is a difficult one. As you say, they go long alcohol, long deep-fried Mars bar and short banks, presumably. Yeah. You know, the Royal Bank of Scotland have already said they will shift out of Scotland and also re-headquarter down in London. That is a real wild card. And look, I do hope the Scots come to their senses, not for our sake, but for theirs as well, because I think separating from Great Britain would be a dumb idea. But look, if they do vote yes for independence, yeah, we'll have a wild couple of days on the stock market while people try and work out what does this mean. Yeah.
And I should add, Tom, that my grandfather was a Scot, so I can be rude. I don't know whether you got any Scottish heritage there, have you?
I've just found a bit recently, so I can be rude about them as well, okay, and have a say in their internal affairs.
Okay, so you would think that it is definitely possible that the market would react very badly to it, only on the basis, I guess, that we don't know and what's going on, and uncertainty is always bad for stock markets.
Oh, look, it is. I mean, we don't know whether Scotland will keep the pound as its currency. We'll have to introduce a new currency. You know, Scotland's banks are far bigger than just the size of the Scottish economy would normally warrant. So, you know, if they're suddenly very uncertain, that's not good either. And, Joe, Britain, and obviously in particular London, is still a massive financial centre. And, again, uncertainty in one of the world's biggest trading centres is not a good look in the short term. In the longer run, things would get back to normal. But, I mean, over a week or so, who knows what might happen.
OK, let's go and talk about takeover targets. And a lot of people have been asking me, well, you know, David Jones was taken over. Myer's share price has fallen. Do you think it's a takeover target?
Look, I'm not quite so keen on Myer. Remember, when Myer was taken over by private equity several years ago, the big play there was A, to revamp the retail business, but B, there was a whole lot of excess and very high-quality property that Myer owned. Yeah. Now, that's been already redeveloped, divested, it's gone. David Jones was also attractive for a similar reason. It's got all those department stores in the best parts of Sydney and Melbourne. You can sell that off. But that job has already been done with Myer, so there's no easy pickings anymore. You'd have to try and extract more out of the retail business. So, as much as people think Solly Lew might look at it and others, Myer doesn't pass my test of a business you're happy to own if indeed there's no bid for it.
Exactly. OK, so that's off. Scratch that one off, Tom. Are there a couple there you like at the moment?
Well, there's a very interesting situation which has come up with iCar Asia. Now, I mentioned this before as a tiddler, and it shot up from about $1 to $1.80. It's now back around the $1.20 mark. Its biggest shareholder, which is a Malaysian company called Rev Asia, has announced publicly it wants to sell out, which is a pretty strange way of doing business. But its second biggest shareholder is Car Sales, the well-known Australian company. And I think what Rev Asia is trying to do is get Car Sales to launch a bid for all the equity in the company. So I think that's a distinct possibility, not one for the faint-hearted, but one to look at. Another thing I'm going to do, I'll have a go at predicting some politics here. I think Malcolm Turnbull, the Minister for Communications, will reform the media ownership laws soon. And one of the probably most interesting changes that will create, I reckon that the inability of big TV stations to reach more than 75% of the total Australian market, that restriction will be scrapped. So I reckon some of the regional subsidiaries will probably get taken over. And one we like is Southern Cross, for example, which is affiliated with both Channel 9 and Channel 10. And 9 probably has the financial power once the Communications Minister makes that decision to have a look at it. Other things I like, look, I mentioned Caltex before. Caltex has actually run very hard and we've started to take profits out of it. Caltex's PE ratio is now pretty much the same as Wesfarmers and Woolworths.
Well, you do call them supermarkets nowadays, don't you?
Well, I mean, Caltex is just a whole lot of little supermarkets with petrol stations attached. And when I first spoke about it, it was on about a 13 times PE. It's now run from around $17 a share to as high as $26. That put it on a 20 times PE. So that one's off the list. But look, one I like, I don't know if you saw a story today about Chinese dairy companies buying up farms in Australia's southeast, in Victoria and New South Wales. Now, the whole move towards wanting to buy clean, fresh milk and cheese and that sort of thing, I think is getting stronger than ever. Yeah. And Bega cheese is one we like. And, of course, it was not that long ago we saw the takeover battle for Warrnambool cheese and butter. I think Chinese companies wanting to buy good Australian dairy produce is a very, very strong investment theme right now. Yeah.
Now, Tom, tell us about Bega for people who really haven't followed it. They know it in the supermarket fridge cabinets, of course. But is it a company that, OK, if we take your tip, and you're doing it advisedly, I know, but that you just do it because I ask you. But the point is, if we buy Bega, is it a company that pays a reasonable dividend? Is it a good company to hold anyway?
Look, I think it is. I think it is. I mean, look, the share price did run up a fair bit after the Warrnambool cheese and butter takeover, and it's drifted back a little bit since then. And I mean, recent days, like everything, it's lost a few points. But no, I like it. I mean, it's got a very strong brand name. The dividend yield is adequate. It's not brilliant, but it's adequate. And it's one of few players in that industry, and that's the thing. And also, you've got Chinese companies saying we want to buy Australian dairy assets. Well, there aren't that many of them. You know, you can either buy individual farms or you can buy a big processor like Bega. Bega is, of course, based out of the southern New South Wales town of the same name. So, yeah, look, I think it's got a lot of things to like, and it's in this general theme about Asian consumers wanting to buy. Well, their dietary preferences are changing more towards ours. They're eating more meat, more cheese, that sort of thing, and they want to buy it from a source that's clean, and Australia ticks those boxes.
When you heard ex-Treasurer Peter Costello talk about our luck running out, what was your reaction to those comments?
Well, it's always interesting talking to ex-politicians because suddenly they say all these things that they would never say when they were in power. You know, you never, apart from Paul Keating years ago talking about a banana republic back in '86 or whenever that was. I was only a little boy then, Peter. You might remember it better.
I remember very well. I was a mature man then. Yes, go on.
Well, look. I think Peter Costello is certainly worth listening to, and he's saying, like, that the property boom can't go on forever, and countries don't get rich just by watching their houses go up in value. We've seen that happen many times in the past. So, yeah, Australia's got some challenges ahead, but look, our interest rates could go lower if things really did get difficult. They've never gone as low as what they did overseas, and we still sit next to one of the biggest and fastest growing economies on earth, being China. So those sort of things haven't changed. Like, yes, the iron ore price has fallen, but it's fallen because we're supplying so much more of the stuff now, not necessarily because demand is dropping off a cliff. So my biggest concern in Australia, to be honest, is Australian politics being such a mess right now, and that does have an element of sovereign risk to it because you just don't know what is going to emerge out of either Canberra or the various state parliaments.
Tom, always good to talk to you, mate.
Yeah, thanks, Peter. Thanks very much.
That's Tom Elliott from Beulah Capital. I'll remember that. After the break, why is everyone picking on the banks? That next.